Let's go to daily time frame. Did it trade into it? Just touched it. Wow. Look, do you see how they are moving up aggressively to go and clear these equal highs? That is liquidity resting right there. They want to go up to clear it before they drop. Interesting. Let's look at USD This one doesn't have what I'm looking for. Okay, look at this example. This is a bullish order block, right? But before that bullish order block, look here. What do you see? Equal lows. That's liquidity. So can you see how they came down to clear that liquidity before they traded into this bullish order block and then they started to go back up? Now, let us look at this on 1 hour and see. This is a daily time frame. Let us look at this on 1 hour. This is where the whole thing started. We are likely to see what I'm talking about. Exactly. This is a perfect example of what I'm talking about. Look, you see? So you could have waited to see this structure before you took your trade. You went up, traded right back into it. This is a midsection of the W I'm talking of. You see? They traded into it twice. So let's say you took the trade upon the second entry or even the first entry. Okay, let's use the first one. The first touch, sorry. If you entered the trade from there, you would have had a drawdown of just 5 pips. And it went up for how many pips? 61 pips before it retraced back down. So you have to train your eyes to identify these structures, the M's and W's I taught you. When you see that the market is trading into a bullish or bearish order block on a bigger time frame, and you don't know if you should enter immediately, you can wait, see a break in market structure in the form of M or W, depending on whether the market is bullish or bearish, before you take the trade. Do you understand me? That is how you can be safe. So let's look for high probability order blocks on GBP USD and then see what happened when the market traded back. I have too many boxes on this chart. Let's say you know that the trend is bearish from the higher time, then the market goes up to clear highs and then trades into a bearish order block. You should be selling. A high probability bearish order block. Look at something. This is GBP-JPY. Look at these highs. They took out these highs. They also took out this old high. Then what did they do next? They traded into this bearish order block. Look, a very long bearish order block. They traded into it, then they dropped down. They gave you a break in market structure and a retest. Look, there's M, the second type of M. Look at it right here. Then traded right back into it. You see? Can you see what I'm seeing? Then they dropped. So assuming you caught this trade from here at the midsection of that M and you held it till they came to clear these lows, you would have made 55 pips trading the daily cycle. So that's how you identify high probability order blocks. Yes, I think there's another one here. Very good. Look, I believe you can already see it. Look at the equal highs they took out. You see? Can you see the bearish order block above it? So they traded up like this, took out the equal highs, traded right into this bearish order block. And then what? They even traded into it twice. Then they dropped. So let's say you caught this during London session. You would have held this trade till what? London close. Don't hold the trade beyond the close of that session. So if you caught the trade during London and by New York, you are in profit, you should close it. Even if it has given you just 20 pips, close it, because when New York comes, there's a likelihood that it could be a reversal. So that's how simple it is. So this is a high probability bearish order block. Assuming you caught it here, how many pips would you have made? 64 pips in a matter of hours. Perfect. You are done for the day. Let's see if we get another example. Yes, there's another example here. But this one didn't play out well. It didn't get to the bearish order block. It tried its best, but it didn't get to it. But that we could have still caught this trade. Look, another thing I should tell you, if you're expecting them to trade into a bearish order block for you to sell, and they don't get to that bearish order block, but then you see a break in market structure and a retest of that break, take the trade. This is a perfect example. Look, they took out these highs over here. They were supposed to trade into this bearish order block, but they didn't. Then later, what did they do? Look, is this not an M structure? Can you see the M structure? Let's draw the midsection of that M structure. You see, they traded right back into it. So these M and W structures are very powerful. Learn how to identify them on your chart. And you can only learn that through practice. They touched it, then they dropped. For how many pips? 116. So they didn't touch the order block. They are taking out these highs, but they didn't trade into the order block. Fine. But you have seen a break in market structure in the form of this M. M, plus retest of the midsection. So the midsection of that M right here, that should be your entry. You see, like here, you would have entered here and it went down for over 100 pips. So it's simple, okay? You just have to spend a lot of time on the charts, doing your best to identify them over and over and over. The more you identify them, the better you become at them.